Hello, this is Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool. One of the most commonly asked questions we get from premium subscribers to FastGraphs are how do you interpret or utilize the price to sales graph, which is a red graph for premium subscribers. I'm going to utilize Johnson & Johnson here just as an example, and I want you to notice the orange line represents a theoretical calculation of intrinsic value at a 15 PE. The blue line in this iteration represents a normal PE of 19. These gives you two valuation references. Now you can accomplish the same thing by using any of these other metrics here. Here I'm going to use operating cash flow. And all these are designed to help you determine whether or not valuation of any company you're analyzing makes sense. We also have the dividend yield, and you can put the dividend yield and see that the dividend yields are highest when the price is lowest or the valuation is lowest. So again, these are just all valuation references that FastGraphs provides our subscribers, and the premium subscribers get the EBIT itself. Now, price to sales is another very commonly used valuation metric, and what you're really trying to determine here is how is the company currently trading relative to its price to sales, relative to its historical norms. So you've got two metrics on this graph. You've got sales and price to sales. I'm going to take price to sales off here, and if you point to these triangles, this just tells you what the company's gross sales were for each of these fiscal year ends. In this case, it's a December 31st fiscal year. And then the price to sales graph just gives you what the current price to sales. And currently, J&J in this example is trading at 4.6 times sales. You can see that during the recession, which is the gray shaded area here, that the price to sales got down to 2 or 3, let's say 3 or below, but 2.5 or 3. And then this, of course, was a very high price to sales here. Now, when you measure that against the main historical graph, you can see that these periods of low price to sales coincide with these low price to operating cash flows in this example, or price to earnings. So the price to sales graph is just simply another tool that you have in your arsenal that helps you determine valuation. Obviously, the lower the price to sales, the better. And when the price to sales gets on the high end, it's another indicator that the company is either fully valued or overvalued. And this works for whatever company you're looking at. For example, if I look in Church & Dwight Company, you can see that the normal PE and the intrinsic value calculation are both around 14.5 to 15. You can see these lines are pretty much coinciding. But the point is that here you have a high valuation using a PE ratio. And then if you go down to the price to sales graph, you will see again that the price to sales in the more recent years has been somewhere around 3 or even a little higher, when historically it's been 1.5 to 2. So again, it just gives you another indicator of whether the stock is trading at a high price to sales rather relative to historical norms. And it's just another piece of the valuation puzzle. This has been Chuck Carnevale saying thanks for listening.